Welcome back. Norfolk Southern has announced some revamped safety measures, including updating its hot bearing detector network as part of a new 6-point safety plan. And this comes in response to its toxic train wreck that ravaged the town of East Palestine, Ohio. And for more on this, we welcome in Lee Klaskow, Bloomberg Intelligence Senior Analyst of Trucking Logistics. And could you give us, please, just a brief update of what's going on the ground there?
Yeah, sure. So, it's really, a moving target right now, to be honest. I mean, the regulators are doing their work, seeing, what's going on, what necessarily caused the accident. There's some preliminary reports that, it was an axle that overheated and caused a derailment. And then you also have, the other regulatory agencies like the EPA going in and making sure that the railroad is cleaning up the spill that happened following the derailment. Norfolk Southern has answered, obviously, under a lot of pressure with the 6-point plan, like you mentioned. A lot of that has to do with investing in its own infrastructure, something that it does do already. What I would say is, for your viewers is that, operating a railroad is not an easy task. It's done outside. There's elements, and sometimes those elements are extreme. When you're moving heavy equipment across, networks like that, sometimes failures are bound to happen. It's up to the railroads to minimize those numbers of failures. I think that the 6 points that the Norfolk Southern has released, I believe it was yesterday, will go a long way in improving the network and the overall safety of the network. Because at the end of the day, Norfolk Southern is a public company, and it does want to obviously maximize its returns that it can do. Safety does make money. So when you run a safer railroad, it's much more profitable than if you run an unsafe railroad. Because if you're dealing with derailments or accidents or other issues, your trains are not on time, they're not efficient. If your trains are not on time, you're not being able to be competitive with other modes like trucking. So the railroads have a vested interest in becoming, as safe as they possibly can. And so what they're doing is they're investing with these things called hot boxes, which are, if you've ever seen a railroad, there's these little silver huts going across the network. And what's next to those little huts are these little devices that will measure the heat of the axle bearings. And when it gets to a certain temperature, it'll alert the crew. What happened is in this accident in East Palestine is that it got to a certain threshold. The train crew slowed down the train, and by the time the train stopped, it was a little too late, and a failure happened, and the train derailed. So they are investing in that, and that it'll probably cost them about $40 million for the 20 additional or the 200 additional hot boxes that they plan on deploying across the network.
So Lee, I mean, obviously it's in their interest to not have stuff like this happen, but then, in a perfect world, none of this stuff would happen, and they would have already invested in all this stuff before the derailment happened. But, given the cost of addressing all of this, not just for them, but maybe for other railroads as they're looking at the situation, wanting to also avoid it, what's the investment case for Norfolk Southern and some of its peers right now?
Well, we don't do buy, hold, sell recommendations, but at the end of the day, railroads are an important part of the supply chain. We all complained 3 years ago when we didn't have toilet paper on the shelves, and we kind of forget how important, railroads, trucking, air freight, marine shipping is not only to our overall economy, but our daily lives. The railroads provide a service where they're able to deliver and ship heavy freight at reasonable prices. So if you believe in the economy and you believe in their ability to run more productive over time, the railroads are an interesting investment case. And again, we don't pick out winners or losers, but from an industry standpoint, they have a lot of runway with regards to winning share from trucking, because the better they get at operating, the more truck competitive they can be. At higher fuel environment, they become even more truck competitive. And the railroads in the East, Norfolk Southern, CSX, are probably the most competitive, or have the most opportunities for share gains against trucking. But they need to, be able to operate at a very high level because those length of hauls tends to be much smaller than what you have in the West with Union Pacific and Burlington Northern.
Lee, can you just help me and the viewers wrap our heads around exactly how big the problem may or may not be? We saw this huge accident in East Palestine, and then we had another accident over the weekend. So I looked up the frequency of these, and I was surprised to learn that we have about over 1,000 derailments on average in the U.S. Every year. That's according to the Federal Railway Association, I believe, or administration. So is this common and it's just not, we don't hear about it, or is this more of a pervasive problem because we've neglected infrastructure and this needs to be solved yesterday?
Yeah, well, so everyone can do better, right? I mean, I can be a better analyst, they can be a better railroad, we all can do better. And I think this is an opportunity for railroads to do better. You're right, that number, it's about 1,000, about 900 of them are from freight railroads and 200 are commuter railroads. And the main reason why derailments happen is because of track failure, not the issue that happened in East Palestine. The issue that happened there, doesn't happen as often. The problem with this particular accident, it is obviously very horrific because of the environmental impact, not only to the residents of East Palestine and surrounding areas, but obviously the wildlife and everything else. So it's a real issue, and it's really highlighting the accidents that can happen. And so they're going to make these investments. And again, it's $40 million with a CapEx budget of $2.1 billion that was expected this year. So, we're not talking about a huge amount of outlay for the railroad in incremental gains. And this is what it's going to be. If they can prevent one or two of these every couple of years, it's a win for everybody. They're also investing in kind of future technologies that use cameras, and a train can go through these portals, and there's cameras constantly taking pictures. And not only are they looking at the axles, but they're looking at everything. They're looking at the locomotive, they're looking at parts of the cars, and they can tell you what kind of failures might be coming up, so they can take that rail car or that locomotive off and schedule for maintenance. Mm-hmm. And so that's going to be a real game changer. There's they're slowly bringing those out because the technology maybe is not perfect yet. Those are a little more expensive. Those are about $15 million a piece. But again, when you're looking at a CapEx budget of $2.1 billion, it's not that much. Mm-hmm. The railroads generally spend about 15% of their revenue on CapEx, and about 80% of that is just on maintenance.
Yeah, I'm not surprised by that figure, and a ray of optimism for the future here. Really appreciate you breaking all that down. Bloomberg Intelligence Sector Head and Senior Analyst Lee Klaskow.